Alright, with all the recent market chaos, I thought it was only appropriate to make a video about safe trading guidelines that we preach every day at GreatStockPicks.com. If you remember, you go to our homepage, go to member login, and then from there you log in, and somewhere on the member page we have links to our safe trading guidelines. I'll open that up here. Made the font really big so you'd be able to see it in this video. It's not normally big and yelling at you like that, but maybe it should be because these are important. So I'm going to go over them real quick. Number one, we say do the math. Before placing any trade, do the math. What do we mean by that? Basically, based on the chart setup, you look at where the trigger is, where the stop is, and then you do the math. How many shares should I buy? And if you're wondering how to figure that out, you just you know you don't want to lose more than, this is a great guideline to go by, more than 1% of your trading account balance on any given trade. Okay, so if you have a $30,000 account, your maximum acceptable loss on any given trade should be $300. So if the stop's 20 cents below, now that's got to be based on the chart setup, then you do a quick math problem before you take the, a lot of people just take the exact same number of shares no matter what, right? And in my opinion, you look at where the trigger, where the stop is, and do the math. So in other words, if the stop's 20 cents below based on the chart, you shouldn't take more than 1,500 shares. That way, every time I take a trade, I immediately assume my stop's going to get hit. I know that seems silly, but I assume it's going to trigger, I'm going to buy it, and it's going to roll over in the next 2 seconds and hit my stop. And that's a good way to think because it'll always have you take the correct position size, okay? So for the purpose of this example, 1,500 shares, you lose 20 cents, that's $300. And I've left out commissions, but it's a good way to do a really quick estimate on how many shares to buy. Have so many people log into our chat room and they'll say, okay, I bought XYZ. It might be their first day in there, which we tell you to paper trade your first week, so we don't have any problems like that. But it might be their first day and they'll say, okay, I bought XYZ. Where does my stop go? And in my opinion, if you're asking that question, you gave no thought to how many shares to buy, so you're not practicing safe trading guidelines. So we talk about it all the time. Number two, pay yourself. Once you have a small profit, I'll highlight that there. Once you have a small profit, I use a dime as a rough personal guideline, and that's true. Sell part of your position and move your stop to break even on the rest. And this is a true statement. You'll have very few losing trades if you do it, and the losses you do have will be small. That's a very true statement. The only time you'll have a losing trade is if it doesn't even give you a dime or more on the initial move, and then it rolls over and hits your initial stop, which if you've done the first one, if you've done the math right, it'll still be within your loss tolerance based on your account size. Number three, stop trading. What do I mean by this? Well, if you hit your daily goal, and everyone should have one, say, I don't care, I'm just going to pick a number, $300 a day. If you hit that, stop trading. Afternoons are tougher, in my opinion, to trade than mornings. Take the money and run. Tomorrow's another day. And then we say, four, stop trading again. Didn't we go over this already? Well, this is another meaning. If you lose half of the amount of your daily goal, okay, so let's just use 300 again. If you're trying to make 300 a day and you're down 150, and again, that number is going to be different for everybody, but if you're down 150, stop trading and come back tomorrow. And this may be a better example, 500 a day, because it's pretty easy to be down 150 on one trade. So maybe 500 days is a better number to use as an example. But if you are, if your goal is 500 a day and you're down 250 on the day, quit. Right? It's the best way to avoid falling into a trading death spiral. And this link takes you to a video, which I'm not going to click on here. But if you've been trading for any length of time at all, you don't even need to watch the video. You already know what a trading death spiral is because you've been in one. Anyone who's been trading any length of time, unless you're just a genius, has fallen into that at one time or another. And that's the reason I started this website, was to keep people out of those, because they can be, it's just a bad feeling and it can take you out of the game forever. So you got to trade every day knowing that you want to do this the rest of your life. And so knowing that you cannot afford to go into a trading death spiral. You can erase a year's worth of gains in one day, just in one trading death spiral. And as long as you're always aware of that, okay, and you follow these safe trading guidelines, you can keep that from ever happening. So I'm going to wrap this up, and we'll talk to you guys next week.